Our next speaker is a seasoned tax administrator and policy strategy with over 34 years of progressive experience at the Federal Inland Revenue Service, Nigeria. Currently serving as Director, Large Taxpayers, Telecom, and Financial Department, he provides leadership in tax policies formulation, corporate tax audit management, and stakeholders engagement, ensuring that tax administration align with national fiscal objectives. Throughout his career, he has been instrumental in setting operational standards, monitoring performance, and bridging communication gap between management and field staff. He has overseen large-scale compliance programs, ensure accurate assessment and collection of taxes, and championed reforms that strengthen the Nigerian tax system. With deep expertise in tax compliance, direct tax, and corporate audit, he brings proven track record of enhanced revenue collection, improved regulatory compliance, and fostering collaboration across government agency and private sector stakeholders. His leadership emphasized integrity, emphasized accountability, and results-driven service delivery, positioning him as a trusted advisor in advancing the tax administration and fiscal implementation. Ladies and gentlemen, for our second paper, let's welcome Dr. Olabode Olatunji.
Good afternoon, everyone. Senior colleagues in the profession, ladies and gentlemen, my esteemed taxpayers. I say very good afternoon to every one of you stayed here. I want to appreciate the organizers of this program. When the senior partner put a call across to me that he wants me to speak here, I quickly grabbed it because one of the focus areas of the service this year is to build capacity of both staff as well as our taxpayers. So when he called me, I did not hesitate in grabbing that opportunity. So once again, I want to say a big thank you for the organizer of the program, and that I hope we'll be seeing more of this type. My name is Olabode Olatunji. I head land taxpayers, telecoms and financial department of the service, and my role is to ensure that land taxpayers in financials, telecom industries, construction industries, and logistic industries are well taken care of when it comes to tax matters. I came with my team. I have the tax controller of land taxpayer financial here. So I have my deputy director here too, Alaji Munir. And we're not Mohammed. Where the third person there, she's totally is one of our elder personalities in the service. Most of the things I've been saying, she is the brain behind the write-up. So for that, if you have any questions, I have a very good team here. I have a very good team here that can address some of the questions. Ladies and gentlemen, the topic before me is to look at the impact of the new reform, tax reform, in capital market. And I do not, okay, slides are right there. So that's the topic, and what we have done as a nation is to reduce the numbers of tax law you need to look at when you are, intending to go into business, or you are intending to put up your tax position. So we now have about 4 of them together. Perhaps if you need to look at all of them, I will try to see how I can bring out some of the cogent issues in each and every one of those 4 new tax. The first of them is the Nigeria Tax Act. That's a unified legislation. Before we transit, the transition date is 1st January 2026. Before you transit, you agree with that we have different type of tax laws. You have Company Income Tax Act, Personal Income Tax Act, Capital Gain Tax Act, Stamp Duty Act, and what have you. Now we have tried to unify them. We have tried to bring them together in a book, in a legislation. Let me put it that way, and that's what we call Nigeria Tax Act. So the Act only brings, only unify the technical aspect of those taxes that we are practicing now. Next is the Nigeria tax addition tax procedures that were or are still in the current dispensation. Personal income tax has some procedures that you need to observe. Company income tax has some procedures that you need to observe. Stamp duty has its own, capital gain has its own. So what we have done now is to bring all these procedures, try to remove those that are not no more relevant, and try to improve on the ones that are there, bring it together in a single act. And that's why we now have a slimmer document for us to work with. So we have Nigeria Revenue Service Establishment Act. It's a replica of what we know as a Federal Revenue Establishment Act. And the last of them does Joint Revenue Board. Before now, there's nothing like Joint Revenue Act. But we now believe that we should strengthen our Joint Tax Board, where all executives of Revenue Authority meet and decide on how to improve the tax system. So, the Nigeria Tax Act, that's the first of all of them, has tried to unify, just like I mentioned, has tried to unify what we have in the existing tax laws and some of the differences you can readily notice as explained on the slide. For now, you can see that we have exemption for small companies who has a 25 million turnover or below. But now the threshold has been increased to 50 million turnover. So that's a gain for all of us, particularly those of us that are in the small businesses. If your turnover is not up to 50 million, coming from February 2026, you are exempt from taxation. Capital gain tax act, the current dispensation is that you pay 10%, but now it has been increased to 30% of the gain. I don't want you to say that that's a loss, but rather it's a way that you make sure that you are fair in getting the fair share of gains into the purse of government. So we have the tax exemption on sales of shares in Nigeria that cumulatively do not exceed 100 million in the 12 calendar period, the threshold has been increased to 150 million. So that's again, to every one of us, particularly those of us that are trading in the capital market. However, the gain coming from that disposal shouldn't be more than 10 million naira. If it's 10 million naira, the exemption will not apply to you. Minimum tax provisions too has changed. Before now it was 0.05 of turnover. The act that will come to force from 1st January 2026 has placed the minimum tax to 50% of net profit before tax. So that's practically some of the things that we, see as differences between what you are going into from 1st January 2026 and what you are practicing now. So what are the other new things that were introduced? Disposal of asset by private equity fund and angel investors are exempt from income tax, provided the asset has been held in Nigeria for a minimum of 24 months. Section 187(2) of the Nigeria Tax Act limits generated items to include essential goods. Generating afford anybody that is in that threshold to claim the input that have been cured in producing their products. Before now, some of these products were listed among the exempts. So some of them were just accumulating input VAT without the opportunity to claim same back. So for those that are into producing educational books, those that are into generation of electricity or transmission of same, or those that are producing electrical equipment, they are now having that liberty to claim back their input VAT when they incur them. New Tax Act also stipulates that shares of profit in non-interest finance are subject to income tax. This is not a new thing. Once you make income, it is important that you pay tax on it. Section 27(1) of Nigeria Tax Act has made provision of capital losses offset against capital gains to reduce the amount of tax to be paid on disposed assets. Before now, once capital gain is capital loss is made, tendency to recoup that loss in subsequent year is always not there. But the provision in the new act has put it there that you can carry forward those losses whenever you incur them. So non-resident companies are required to pay minimum tax equal to the withholding tax deducted on a 4% flat rate on Nigeria source income if no withholding tax applied. So 4% is minimum tax that is payable by a non-resident person. If it's the non-resident comes to Nigeria to generate income. So for all of us that are engaged, software developers who are not residents of Nigeria, please know that it's mandatory that you ensure that you deduct 4% from any payment you make to them. Otherwise, the laws require that you bear the consequence of non-deduction, which means you have to pay that portion to government. So we also have, as part of addition in section 59, which introduced a development levy of 4%. The development levy of 4% is to, consolidate all the taxes that cannot be tied to, you cannot describe as income tax, but rather something you pay for, driving the system, driving the fiscal system, driving the economic system as well. For instance, with like a NIDA, police trust fund, educational tax. So all these taxes, now they have their source, their benefit from the only 4% development levy, which companies that are taxable in Nigeria that are not exempt from tax will be paying. Section 47 states that gains are going to any pension in respect of a disposal. Any person in respect of a disposal of shares by a non-resident shall be a chargeable gain where the disposal results into a change in the ownership structure to group membership of any Nigerian company. So this is also talking to non-resident person that are invested in Nigeria. Next is to talk to section 34(1)(a) and 2 of Nigerian Tax Act. We say that gains acquired from the disposal of shares of any Nigerian company shall not be chargeable gains where the shares are transferred between an approved borrower and a lender in a regulated security lending transaction. So that's an exemption talking to instances where shares are transferred between an approved borrower and a lender. So the two of them must be approved borrower or an approved lender for this provision to apply. According to the 9th schedule of the new Tax Act and section 136 and 137 of Stamp Duty Act, shares are still subject to 1.25% of loan capital. 0.75% of a share being issue and 0.125% of loan capital. So that's talking to stamp duty to be paid on share capital as well as loan capital. So 0.75% is what you pay as stamp duty, while you pay on share capital, while you pay 0.125% on loan capital. Economic development tax incentive for companies operating in priority sectors like manufacturing, mining, renewable energy, and agro processing eligible businesses receive a tax credit on qualified capital expenditure over 5 years. The tax credit elapses after 5 years. So if you cannot claim, you do not have the profit enough to take care of that benefit, then you lose it after the 5th year. The incentive may be extended for an additional period of 5 years and no more. And the condition that the company invests 100% of the profit during the incentive period for expansion of the same product or products. So what that point is saying that for you to, have the opportunity to get the incentive for 5 years, you must have reinvested the credit into the business in order to expand it or to improve on it. Investors in gas pipeline shall be granted a tax-free period of 5 years at the expiration of the economic development incentive certificate. So that's talking to those that invest in gas pipeline. So it's an incentive for us to get our gas gas sector moving. The entity, that Nigeria Tax Administration Act, as I mentioned, is the act that speaks to procedures. And the key changes include that all taxes to be filed via unified platform using a single tax application number. So whatever tax you want to pay, you use a single tax application number. That's your thing. The new filing requirements for transaction in virtual asset carried out by a virtual asset service provider, like BASP, Section 25 of the NCAA, all speaks to that. But electronic fiscal system and e-invoicing is also part of the provisions that the Nigeria Tax Administration Act bring to fore. It's going to be mandated that every companies will have to be filing their returns via by keying into e-invoicing platform that we're just rolling up now. So the implication of that is that all transactions will not be visible to the service, to FIRS or to the tax authority as they are being executed. So this is a point that we need to be more careful in when we file our return to ensure that all our transactions are filed to the tax authority. Currency of tax payment still remain at the currency of transaction. So there's also increase the penalty payable for non-compliance. So the non-compliance penalty has been increased, particularly for some of, particularly for failure to file returns. Failure to file returns is now 100,000 naira in the first month of failure, and 50,000 naira for every month failure continues. For awarding contracts to companies that are not registered for tax purposes, the penalty is 5 million naira. So please always request for evidence of registering for tax purposes whenever you are giving out any contracts. The essence is to make sure that everybody is on the same page when it comes to transacting business in Nigeria. We do not want a situation whereby some will be paying their taxes while some will not be paying the tax due to government. The next act to be looked at is the Nigerian Revenue Service Establishment Act. I mentioned that there's a replica of what used to know as a Federal Revenue Service Establishment Act, and the new act replaces the old one. So it just changing the name. That is very common. So as a new federal body responding for assessment, collection and accounting for revenue attributable to the government of Nigeria, the act provides a framework for the NRS to, upon request, support state if there's any need, and local government to collect and administer taxes. This provision was not explicitly mentioned in the Federal Inland Revenue Service Establishment Act. The Joint Revenue Board Establishment Act is an act that replaces the existing Joint Tax Board provisions in our laws. I mentioned that there's nothing like an act for this before, but you can have a provision of pertains to joint transport in the pocket of some of our tax laws. The law, which mainly serve as we really make joint transport to serve as a platform for dialogue and policy coordination among tax authorities. Also try to put in place enforcement mechanism for the authorities to carry out their job. Introduction of the tax ombuds office is also embedded in that act, and the objective of having that office is to see to the complaints of taxpayers or consultants, so that justice will be given as soon as possible. We have seen instances where taxpayers not complain, and 2-3 years after complaint, nothing is done. So the office that's going to be established by this new act is going to address that and ensure that the complaints of taxpayers are addressed as fast as possible. So this role does not really remove the role of tax abuse tribunal. As you are aware, tax abuse tribunal is there to address disputes. It's a dispute resolution quasi court. I'm not a lawyer, but I know that the appeal tribunal is not a court, but an administrative platform for taxpayers to bring in dispute as well. So why Ombudsman's office addresses complaints? Tax appeal tribunal, bring the two parties together and resolve disputes. So what are the further impact that we can already notice from the new development? We have creation of a new revenue service. My colleague rightly mentioned that very soon, what I have my card will change to NRS. He saw FIRS on the card. He said, this effective from January 2026. This name will not be there again. I said yes. So I'll be representing NRS come 1st January 2026 upward, if God sees we are alive. So real tracking is one of the focus area of the new law, and that is why the introduction of e-invoice. So we want to make sure that we're able to have a look at what transact in every businesses as they are concluding and possibly consummating same as well. This reduction is also something that is very germane in the heart of government. So we want to make sure that this is resolved as early as possible. Tax abuse has been there. The act reinforcing the need for that tribunal, TAC, to be strengthened. Long-term buyer system for real-time e-invoicing is going to be introduced. I've mentioned that one. All taxes filed via unified platform. Usually it will be with a single team is what you use to file your returns. Businesses are required to maintain detailed invoicing. VAT allocation must reflect regional consumption. There have been so many complaints about decision of VAT. Why most of payers are in Lagos? There has been a faction of the argument that most of the consumers are scattered all over the nation. That it's not correct that what the VAT we generate in Lagos, we see them as, or we receive in Lagos as payments are mainly from Lagos. So it's been mandatory that every taxpayer will specify how much of their sales are done in Bauchi, how much of their sales are done in Sokoto, Enugu, and all other states of the Federation, why the returns are being filed. I would also like to mention that the small businesses turnover have been pegged to 50 million. So any company that is whose turnover is not up to 50 million is regarded as a small company. There's going to be the law has also increased the threshold for personal income tax exemption to be 800,000 naira. Expanded local investors base. It also the law encourages retail participation in capital markets. Yes. Increased foreign investors participation is also envisaged. A digitalized tax system will be more trusted by foreigners, and that is why we're embracing the invoices. So we think that the fact that foreign investors see that Nigeria companies are more transparent when it comes to rendition of returns now is likely to boost eagerness to do business with Nigeria. So the summary table I have as the key impacts is that centralized NRS, the essence is to simplify tax processes for market participation. Digital invoices is also something that we should embrace because we're trying to see that nobody is hidden from the basis of the law again. Institutional structure is also being strengthened because Ombudsman office is there to address complaints. Tax appeal tribunal is being strengthened to be able to carry out the dispute resolution exercises. Tax exemptions are also embedded there. So we have implementation challenges. Yes, we have implementation challenges, and one of the ways we think we can address those implementation challenges is this engagement, this type of engagement, engaging the stakeholders, engaging even the tax officers. It is a mandatory exercise in my office now that every week an aspect of the new law must be treated in form of a technical session. So all my offices, as you know, they mark a part of their time to discussing aspect of the law. So I want to invite everybody seated here as well to see how they can start bringing, start improving their knowledge of the tax law by way of having technical session on aspect of the law. My staff are always available. If you need any of us to talk to you on any aspect of it, we would definitely, be glad to grab to attend. So improve channels for investors. We try as much as possible in the new law, to see how foreigners, new investors can, have trust in Nigeria of today. Ladies and gentlemen, I think I want to thank you for being attentive to my lectures. Thank you.